Ladies and gentlemen, hello, and welcome to this afternoon webinar here at Admirals. I hope everyone has a great time so far. And today we're going to talk about something really important in trading, and it's the limit orders. Many traders, unfortunately, they have a big misconception about the market orders. They don't really understand how do they buy, how do they sell, what does a stop loss mean, what does a take profit mean, and how to really make the max out of the orders in the market. So let's get started. And today I will talk exclusively about the limit orders. So we do have the instant market execution, we do have the stop orders, and we do have the limit orders. And unfortunately, the misconception is with the limit orders. And that's what I would like to really address in this webinar. And I hope that by the end of the webinar, everyone will walk away with a great knowledge and how to implement. I will also give you some strategies on that, okay, towards the end. So as usual, traders, just to understand that this content is for general information only, and it don't intend to provide any trading or investment advice or any personal recommendation. And for the new traders here, allow me to introduce myself. My name is Theo. I do have more than 10 years experience in trading and in investing. I hold a master's in physics. I like the long-term approach about investing in a non-leveraged products, like in the stock market, like the cryptocurrencies. I buy and hold mainly. When it comes to trading, I like to be more active in specific instruments like scalping and intraday, just in few instruments only. As many of you already noticed on the live trading webinar. If it's your first time with me here, I will share with you guys the link for the live trading sessions on a daily basis. I do here at Admirals. Also, I like the swing trading approach, or instead of swing trading, it's better to address it. I like to get in from support resistance zones and try to get with the momentum of the market. All right. And here at Admirals, I'm a trading educator and an analyst, and I believe that's going to help you a lot because you're going to learn technical analysis from an experienced trader. And again, just a few words about our brokerage. We are a Forex and CFD broker. We have thousands and thousands of financial instruments. We have support in so many languages. So whichever it's your native language, you're not going to have really any problem communicating with us. We have too many licenses. Some of them are here, as you can read, the CISEC in Cyprus Security Exchange Commission, the FCA in the UK, the EFSA in Estonia, and in Australia, the ASIC. Also, we added now the Canadian license for our fellows in Canada. In South Africa, we do have, and in many, many other countries around the globe. When it comes to, and that's what I love here, when it comes to intraday trading and in scalping especially, we try to keep the spread as minimal as possible, because if we try to get a move of a 10 pips or 15 pips within with some period of time, then the less the spread, the more likely we're going to get our pips faster. All right. And you can access our products through the MetaTrader 4, MetaTrader 5 platform, and soon from TradingView as well. Also, you can download the mobile application on your device. So let's get into, we will see today the limit orders, as I already pre-mentioned. So, of course, what is a buy limit order? Excuse me. What is a buy limit order and what is a sell limit order? Also, we're gonna see one more time the concept of support and resistance because it's crucial. You're gonna tell me that, hey, Theo, I know support and resistance really well, but, and I believe you and I trust that you know, but why is it so hard to trade from support and resistance? Why when the price, let's say, is decline like this, and here it's a support zone, price decline like this, it comes here, and many traders, they scared to execute a trade on the upside. I don't understand this, because when we see something that is happening, we have the tendency to believe that this will continue in this predominant direction forever, or at least until we feel that it's enough. So most traders, they take it kindly into a personal perspective, like they make trading so personal, and they cannot stay objective and understand really what the market is telling us, what is it doing now, and where are we now based on the current market situation. So we will learn support and resistance for one more time. And also, why it's important to use buy limit orders at support, and if we're going to use sell limit orders, to use them from resistance. Now, let's start with a definition of what a limit order is. Okay, and by definition, as you can read here, a limit order is an order either to buy or to sell an indices, a currency, a commodity, a stock at a specific price. So let's say the market, and I will give you an example here. Let's say we use the gold market. And the current price, assuming we are in an uptrend, and the current price is here, and I decided that I want to buy. So let's assume that this current price is the 1,850 US dollars. So the market from its previous peak here is trading at this point, and it's fairly far away from its mean from the previous peak. So at some point, the market will reverse or retrace or correct its move for many known and unknown reasons. So that's the behavior of the market, and that's first traders, we have to accept that market move in this wavy behavior. If it goes up, it's going to come down at some point before it resumes its activity to the upside, and it's going to repeat this behavior until it decides to change direction. And when it decides to change direction, maybe it's going to stay for a while in a range, consolidate, or it's going to immediately change direction, and it will repeat the same behavior, but in the opposite way. So in this downtrend. Now, let's go back to our example. $1,850 a gold. We decide we want to buy. We use technical analysis and we determine where we want to buy, regardless the reason, the decision made. We want to buy. How to use the buy limit orders? Well, let's say we identified that previously the market traded from this level with momentum upwards. So we believe that when the market is going to retrace back, if it's going to tap into this area, there will be a lot of other traders around the world that they have the same belief about where is this market heading. And they will all most likely want to buy at this area. Some traders, we call them the Fibonacci experts. So they use Fibonacci tools. They take the swing from the low to the high, and they try to find the 50% retracement or this golden ratio, which is the 61.8% retracement. And they place their buying limit orders there. Other traders, they use higher highs and higher lows, and at the previous swing high, like this one here, they're gonna put a buy limit order there. Or they will wait as soon as the price comes at that level, they will be in front of the screen to execute at that area. Other traders, more systematic, let's say, they use systems with EAs, expert advisors, and all this stuff, more computerized. They can monitor moving averages or other indicators. And once the price comes close to that mean, as we call the resting zone, automatically buying orders will be executed to the upside. But in the markets, we see something repeated over and over and over and over again, traders. And that's most of the times, all these factors I mentioned so far, they have the tendency to cluster around the same area. I'll repeat that. They have the tendency to come and meet at the same zone, at the same area. So in many occasions, and as I show you many times on the live trading webinars, we have this peak here, and we take also the fib retracement tool, and we start from here to there. Very often we see that the market has the 61.8% or the 50% very close, just few pips away from this peak, from this top. So there are different schools of traders, like fib traders, like support and resistance zones traders. They monitor the same market, and when they are looking at pretty much the same level to buy for different reasons. Okay, so what can you expect it to happen if 10,000 traders, let's say, for 20, 30, 50 different reasons, traders, they are looking at this specific price level to buy? It's going to bring some significant momentum to the upside, isn't it? So when we want to place a buy limit order, the highest probability strategy is it comes when we place the buy limit order when the market is trending to the upside, or when the market is really moving within a consolidation area and we trade from support to resistance and vice versa. All right, so let's read this example. A buy limit order is buying at a lower price, as we said. So if we are looking at the gold market, the price is here at $1,850. And a trader wants to buy at a lower price, let's say to 1,830, again, for any reason. We can simply put a buy limit order at that area. Now, if the price decline and come and tapped into this area, automatically our trade will be executed and we will be participating in the market. And of course, we determine our stop loss take profit based on the market structure. Or possibly a sell limit order is an order that allows us to sell at a higher than the current price. So In this example, if the gold is traded at $1,850, we want for any reason again to sell when the price reaches $1,900, then we simply place a sell limit order. If the market tapped into that area, then our order will be activated, execute, and will participate in the market. Now, what are the benefits of using limit orders? Well, for everything we do, there are plus and cons. All right, guys. So, few of the benefits of the limit orders is, first, it allows the trader to enter positions at the specific price levels. So if I want to get filled, let's say the gold is moving higher and I want to sell here $1,900 for any reason, guys. Either it's a strong resistance or the market came with a double top, whatever is the reason, whatever, or you believe it's too high to be at the $1,900 an ounce for any level, any reason. You decide that you want to sell from this level, only and only if the price comes and touches this $1,900, then and only then you will be in the trade. If the market comes to 1,899 and it won't touch the 1,900, of course, the bid and ask the spread, then you're not going to be in the trade. So you have accuracy in your entries. Provides traders with more control over their trades, and this is something really important. And I would like to read you the explanation here. So the limit orders gives trader more control over their trades by allowing them to set specific price at which they want to buy or sell securities. This helps traders to avoid any emotional decision, as they can set their desired price in advance and stick to the trading plan. So you don't need to be in front of the screen and wait, did the price reaches that level, or to look at your device all the time. Oh my God, you're in the application all the time. Did I reach that level? Should I start selling now? Should I start buying now? No, it's like what I like, we set and forget. Okay. And when it comes to stop losses, what are the stop losses? Stop loss is an order the trader initiates when it's about to enter a trade. Now, if I buy here, if the market is like here, and I have a buy limit order here, okay? Or let's keep it more simple. If I buy here, okay, I am in the trade and I am long here. So I bought at this point. And I will put a protective stop at this area here, stop loss. At this point here, I have a sell limit order. I'll repeat that again because it's a bit confused. At this point here, my stop loss behind the scenes for the broker or for the market, it considers as a sell limit order. So if the market, it's going to come and tap into this area, a sell, sorry, I said sell limit, it's a sell stop order. If the market is going to touch this area, my buying position will be automatically canceled at the loss. But the stop loss it's an order we give to the broker to sell and get us out of the position, because we believe that at this point here, our trade is invalid. So when we set up stop losses or take profits, we also set buy limit or stop orders, sell stops, buy stop, or buy limit, sell limit orders in the opposite way. Okay, guys, I don't know how experienced you guys are, or how familiar you are with the stop loss order, what exactly it means, because you have to understand, if we have a stop loss below this area, let's say we are long and we have a stop loss below this area, if the market comes here and touches this area, there are, our order, it's a sell stop. We are saying to the broker, please sell this position out and get us out of the market right now, because we believe that this is not the right market conditions that I thought it will be. But there are other traders that right here, they believe, they didn't buy, but right here, they believe that if this swing breaks, then the market is in a downtrend. So they have a sell orders waiting to be executed. Also, sell orders waiting to be executed, they are from the buyers who are wrong at this point. So there is accumulation of sell orders at this point here that will force the market, that will drive the market with significant momentum to the downside. That's why when we see these rapid falls, they tend to come with high volatility, because there are many orders that they are executed either as stop losses, either as market orders to move with that in that direction. Okay, I will continue this series, so I will probably make another webinar about that to explain a bit more about this situation here, because this will help you understand where exactly you should place your stop losses in case when you are trading, not in case, when you are entering the market. Because let's say you enter here and you place your stop loss there, there is a high chance, if the market consequently it's going to retrace a little bit before it's going to resume, to get your stop loss out of the area and then continue. And then many traders, they say the broker hands their stops, other traders, they took their money, the market took their money, and so many nonsense things, just simply because they really don't understand how the orders are placed in the market. So, and I believe after this webinar, guys, you're going to have a very good understanding of how the market operates. If you want, when we're going to upload it on the YouTube, you can watch it again. So here there is an example that I would like to emphasize the using of limit orders at support and resistance, and not just randomly in the chart. So, but before that, we really need to understand why at support and resistance, and what's the thing with support and resistance. You will hear everywhere, you will watch everywhere about support, about resistance, but really, what's the big deal about that? Okay, so the traders, they use support and resistance levels to identify it, potential, of course, entries and potential exit, right? Like down here, it's a potential entry because the market, it bounced in the recent past. So when it taps into this area, most likely going to experience the same behavior and push higher. So a support level, it's the price level where buying pressure is overcoming selling pressure. So the buyers here, they appear with strength and they push prices higher. That's what support level is. So if the buying pressure does not overcome the selling pressure when the price approaches support, and the selling pressure overcomes the buying pressure, then and only then we're going to see a break of that support level. And if it's a sustainable for a next couple of sessions, trading sessions, then we say that, yeah, that's a valid break, because at many occasions, traders, we see that false breaks out of support and resistance levels. And then resistance on the other side is the price level where the selling pressure, like here, the selling pressure overcomes the buying pressure, and it forces the price to decline. So here it was a resistance, first resistance mark. Price came right here, decline. Resistance, we can see it on the left. Price came here, decline. It didn't decline all the way to meet the previous support, and we see that some buying activity is taking place. We can see these candles here, these strong candles, and we see that the market finally overcome this resistance. Okay, but we could see that in advance after this decline failed, and we see buying pressure at this area. So we can say that, hey, this market maybe has a failed decline here. So even if we are in a short trade and we didn't take any profits down there, maybe we have to think about it a bit better. So what to avoid when using the limit orders? There are two very common mistakes traders they do all the time, and at many times they are wondering why this happened and why that. So first, we better avoid to use limit orders very close to the current market price. And why is that? Simply because when the price is like this one here, it's moving higher, there is a very, excuse me guys. So there is a very high chance of the market to have a false break at any point in this move and start retracing. As we can see, this is an uptrend, and start retracing backwards. So if we're going to put a buy limit order here, the market, the current price is this one. I think I took the screenshot from the Aussie JPY or pound JPY, one of these two anyway. So the market, it's right here at 100 and let's say 66. If we have a buy limit order at 165.6, that's few pips away, not few, some pips away, then, excuse me, then what can happen is the price can decline a little bit, because on the lower time frames, it can start retrace back. If we're going to see this correction, the market will take us with the trades. Our stop loss most likely will be somewhere here or there, but based on this move, the market can retrace and come to retest the previous swing high. And from here, it can fuel up with much pressure and momentum to push to the upside. So we have to be careful with that. And the next one is better to avoid to place limit orders far, far away from the current price, because maybe market conditions will change and our analysis at this point, it won't be relevant when the price come to this area. So better to, if the current price is here, and I believe that we are approaching this area of resistance, we can place our limit order somewhere here rather than to the next available resistance area. So if the market is going to come here and this resistance will hold, we're going to get filled and we're going to be pushed to the downside. Ladies and gentlemen, at this point, before I will give you the two strategies I use mostly for the limit orders, I would like to mention, especially to the new traders, that Monday to Friday I do live trading webinars, and I will send you the link of course from the website. Just give me a second. In the meantime, if you have any questions, please use the chat box to communicate with me. Here is how you can register on the webinar. Please let me know if someone has difficulties to see it. Also, I would like to make sure that you traders are aware about our YouTube channel. Here at Admirals, we have the trading spotlight. All the webinars myself, Paul and Jens does, we put it there. Also, Dr. Elter's website, Mr. Dr. Elter's, not website, sorry, webinars here. And recording live trading webinars. You can watch them. Here is the link. And another two pages. The first is the Instagram. Please make sure you follow us. We put reels and content on a daily basis, and that's really great feature for you guys to learn and get informed with the news and analysis. And of course, the last one I would like you to know, it's the Telegram channel. When you use it on your on the application, not on the website like I show you now, you are able to put comments, and I would love to read some of your comments, especially if you have any trades on and you want to post them here. I keep an eye all the time on my Telegram, so please feel free to do that. So let's go back to the presentation. And the two strategies I mentioned, the first one is how to use a buy limit order actually. First, we identify the support in the market, the near support, like this one here. Second, I will encourage you to use the one indicator that calls ATR, stands for average true range. By default, it's on the 14 period. I use it on the daily charts only. I don't consider it in a lower time frame, not even in a 4-hour chart. I prefer to use it on the daily chart. So if I want to enter in this market long, and I want to, I saw that here, it was, by the way, that was a hammer. So it's a tail here. And when the price came a few days ago to this area here, if I would like to buy it, I will first identify this strong area of support. Looking at the left, we also have rejections here, multiple rejections. So it means this is a strong level of support. So most likely the market will bounce if it's not going to penetrate. And then I will come to the ATR. So I decided I want to set up a buy limit order. Then where my stop loss will be, I will come to the ATR and I will check how many pips in the last 14 days this particular currency pair move. And in this occasion, it's about 120 pips. So either I set up a stop loss of 120 pips or a little bit less than that. I discussed this more on the live trading, to be honest. And because there are some other factors and we do analysis them on a daily basis. So either on the 120 or a little bit less, maybe 100 pips, maybe if this distance here from the entry, it's 70 pips and still fine, we can do that. So, and it gives us a good chance that if the market is gonna bounce from this support to experience some winning trade by the time it's gonna reach us, it's near intraday or short-term resistance. Then we have the sell limit order. As I already mentioned, it's better if we use the sell limit order and the buy limit order close to the current price action. So the current price is here. That's the Euro Kiwi currency pair on the daily chart. Here I have, for example, my sell limit order because that's the area the market rejected in the recent past, let's say, about 5-6 months ago. And I believe that when the market is going to come here, it's going to sell off again. So I will check the ATR, let's say, based on the today's data, it's 130 pips. The average candle range, so I will set up my stop loss accordingly. However, I have predefined rules to set up the stop loss, and when the market touches here, I will be fielding the trade with the expectancy that other traders, they trade resistance, or other traders, they trade maybe longer time frames, or for any other reason, known and unknown, many other traders and big funds, they are looking at this area here to get into the short side. So that's how do I play the limit orders. But remember guys, always use your limit orders with your average true range, so you have a good understanding of how much in range the price moves on that particular currency pair or on that particular indices or commodity. Okay, so you don't blindly and put a sell limit order here, but because of fear not to get stopped out in a trade, you're going to go and put 300 pips or 400 pips as stop loss. But actually this currency pair moves 100 pips a day, so you lower your chances to experience a winning trade of 2-1 or 3-1 within the next few days or within the next 4-5 days window. So, ladies and gentlemen, that's all from me today. I hope you really enjoyed the session. If you have any questions, any feedback, please, for anything you want to see more here at Admirals, or if you you want to express anything in regards to trading, please feel free after I end the webinar to submit the form. Just give us your feedback. It's going to take you maybe 10 seconds, maybe 20 seconds. Kyle, it's a pleasure to see you. George, great presentation. Many thanks, Kyle. Yes, we will do that. I will pass it on, Kyle. Thank you so much. I already informed the team. And guys, I would like, myself and Admirals would like to thank you so much for taking the time to be here. I believe that everyone here, every trader deserves to be a successful trader. and I'll do my best. And here at Admirals, we try to do our best to help you and make your path much easier. So I look forward to see everyone tomorrow at the live trading webinar. And for now, I wish you have a great day ahead. Thank you so much. Bye-bye.